G'day folks, Jim here from Orchard Forex. It's Wednesday the 16th of September and I thought I'd put out a quick video to see the possible outcomes ahead of today's FOMC meeting, which following on from Jackson Hole at the end of August, needs to see the Fed provide some clarity on how it's going to allow the economy to start to run hot. The Fed did state at Jackson Hole that they are now willing to stoke inflation above the 2% target, while keeping interest rates low, which is the opposite of what they would have previously done, when they would have quickly raised rates to quell any prospective inflationary issues. They're now following the opposite direction in the hope that production capacity will be unable to keep up with increasing demand fueled by the low interest rates, and thus fueling renewed economic growth. And if they do follow this path, we should see a good rise in the stock markets over time, as well as a softer dollar. On the other hand, though, the Fed will have one eye on the US election in November and may prefer to wait until the December meeting in order to provide us with that clarity that we desire, in which case we're likely to see a move lower in stocks as well as a stronger US dollar. So we'll go and have a quick look at the charts. So here we have a 4-hour chart of the euro, and it's continuing to consolidate after its recent rise over the last couple of months, and we've got fairly defined ranges really up here above 120, and at the same time we've got this decent support below 117.80 down to this sort of 116.90 figure, and it could be that this consolidation continues because the momentum isn't all that strong on the 4-hour charts. The dailies, they have been correcting from having become overbought and now look to be flattening out. So while I think this is a fairly momentous meeting for the Fed, it doesn't necessarily mean that we're actually going to see a huge rally in the euro or sell-off, or vice versa for the US dollar. So for the time being, I prefer to continue to kind of trade this range, and then if we were to break either side of say 120, 117.80, just go with it, and we might expect if we do see a break of 116.90, then I think we can head down towards 115 and a half or so. That would come about if the Fed didn't really provide us with any lead in direction. On the other hand, if they're dovish and they provide clarity as to how they're going to push inflation higher, then a break of this or 120 level, we really need to go out to the weeklies to look at the targets there. And above this 120, we've got these two FIBO levels here, and that's in the sort of 121 and a half, 121 area. But until we do break that 120 or figure 20 area, then I suspect we're probably going to continue within this range for the time being. On the Aussie, that's quite interesting at the moment. And here we have a daily chart of the Aussie, and as I've shown you before, we do have this bearish divergence of higher highs and lower highs, and it may be that this kind of sideways to upward trend does continue, but it's choppy and hard work to trade. But if we look at the hourly charts, and I'll bring you back to the hourlies, we reached this 73.45 area overnight. That was on the back of the improving Chinese data, and it does seem that we're potentially building a reverse head and shoulders here. It might be coming a little bit over mature now, but if the Fed do provide clarity, the risk assets are going to take off, and if we do head above this sort of 73.5 level, the target for the measured target for the Aussie comes in above this high here. It actually comes in around 74.70. This is 73 and a half really, but the measured target from the low to the neckline brings us back to 74.70, and we haven't been there for quite a couple of years at least. We go right back to here, August 2018 or so, when we were last up here. This 76.4% FIBO retracement level comes in at more or less 75 cents, so that'll act as resistance as well should we see it. The weeklies are becoming somewhat overbought and maybe a little bit toppish, So it may be that we don't even get close to taking this out, and if the Fed are a little muddled in what they have to say, risk assets are going to come lower, and the Aussie will then retreat back down, possibly to below this low here, sort of 72.5, and all the way back down here to 72 cents. So that remains to be seen. The 1 hour chart's a little bit heavy. The 4 hours are not showing as much either. And as I said, the dailies, I've said that before, that we are seeing some bearish divergence. So in the medium term, I can see that these indicators will continue to correct themselves, while this sideways to slightly higher channel continues to develop over time. One of the more volatile assets that we could see today could be the gold market, and as we've been watching over the last couple of weeks, this ever diminishing range in the gold price has kind of brought us into this triangle, and we're reaching the apex. The 4 hour charts aren't actually telling us a great deal, so it may end up just being choppy, but a break of either side of the triangle could see us, depending on what the Fed do come up with, could see us head sharply higher or lower. It's a bit difficult to tell at the moment, but the 4 hour charts are fairly neutral. The dailies have been unwinding, but they've more or less turned neutral, while the weeklies actually look rather toppish. So if anything, I'm a bit dubious on the upside for gold. But in the longer term, if the Feds do want to raise inflation, gold should be a beneficiary of that. So that's worth watching out for. As far as the stock markets go, I'll just have a quick look at the S&P. Now here we have a daily S&P chart. We're toying again with the 3400 level, and the daily charts actually look pretty neutral right now. So the 4 hourly is pointing a little bit higher, but once again, everything will be dependent on the Fed. It will be very volatile, I think, on the announcement, but possibly we end up going nowhere. I don't think that's going to be the case in the medium term, and the stock markets will find a new direction as we go forward, possibly chopping sideways. But for the time being, as I say, the 4 hourlies look mildly positive. The dailies were pretty flat, and the weeklies actually look very toppish, and we have this bearish divergence, which I pointed out before. We've got these higher highs here, but the RSIs are seriously running out of steam, and the weeklies, they do look overbought. The monthly charts, though, still point higher, despite the fact, let me blow that up, despite the fact we have got this bearish divergence as we continue to make new highs. So we have to wait and see. If anything, the stock market, the risk reward does look to be to the downside to me. But once again, it's entirely dependent on what the Fed have to say today. So we'll have to wait and see. I'm not going to go on with a prolonged outlook today, as everything depends on what happens with the Fed. But we'll do a more in-depth outlook over the weekend once we know what the outcome is and the prospects for next week's trading. So until then, have a good one and trade safely, and we'll talk to you next week. Cheers.